Welcome back, folks. We had the Dow finish up 27, NASDAQ was down 12, S&Ps were up 3, and right now we have our man, Mr. Chris Gaffney. Chris, folks, is the president of EverBank World Markets. Now, as you come over to our website at TFNN, you're going to see the EverBank banner right on the right-hand side. As you hit that banner, you're going to see 5-year MarketSafe Metals Hedge CD. We're going to walk you through how this works. It's a phenomenal product, folks. And we're talking about MarketSafe. What that specifically, part of that, what specifically means is that you can't lose your principal, which is just pretty amazing. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. It's great to be here.
It's always a pleasure, man. And I know that this MarketSafe Metals Hedge CD, we have a funding deadline, folks, of November 12th. So this Wednesday, there's 1,500 would be the minimum to open it. Can you walk the folks through just a bit of how this is set up and what they can expect, Chris?
You bet, you bet. And that funding deadline on the 12th, as long as your application is in process, as long as if you're not a current client of EverBank, as long as you've got that application in process, we can still get you invested in this CD. It's a 5-year term, as you suggest. And it's based, the upside is going to be based on the upside of gold and silver, 25% each of gold and silver, and then the other half of the upside payment is going to be based on the downside of the S&P 500. So that's where the hedge part comes in.
Yes.
So what you're looking for when you invest in this CD, what you're looking for the best payout is going to be for gold and silver to go up in value over the next 5 years, and for the S&P 500, the stock index, to drop in value during the next 5 years. There is a cap, so the maximum that you can earn on this CD is going to be 45% over the 5-year period. And as you stated in your introduction, there is no downside risk. So you will get your principal back at the end of 5 years. That's the worst case scenario. So you cannot lose money in this product.
And it's so cool. Like I have Andy Heck on with us too, and we were just talking. It's intriguing. I've been in this gold and metals market for a long period of time, and what gold is doing right now is that it's testing the July lows as well as testing the breakout area from 2009. And it's like we're at 1,088. And folks, guess what? It still takes 10 tons of rock, or O-R-E, in order to get an ounce of gold. So every time I keep looking at this, Chris, it's like, hey, gold is down, but it's like, okay, is it going to go dramatically lower than the price of production? Well, we know that it can, but this is a nice little product if you want to be in that market and know that you can't lose any money. There's only...
Right. I mean, it's a real volatile market. These are extremely volatile markets, and you're talking about gold, but look at the S&P, where the S&P has run up to too, and
totally.
And so on one hand, you've got gold and silver at pretty, if not they're pretty low levels. They're good values. Yes. Right now down here. They could certainly drop further, but they look like good values. And then at the same time, you've got S&P, the stock markets at pretty much historic levels,
right,
close to, and we had that big pullback in August of this year, the big drop that started in August, but now we're right back to where we were. It's like it never happened. So it's a good product if you want to be involved in those markets that can be very volatile. This is a good way to get money invested at just $1,500, and you get paid if in fact those gold and silver go up and the S&P drops. This is IRA eligible too, which is an important factor. So if you've got that IRA money that you need to get invested this year, this is IRA eligible.
And folks, what is amazing, it's also FDIC insured.
It's a great product. Hey, Chris, it's Andy here. How you doing?
Great, Andy. Good to hear you.
Good. Just wanted to say, with the prospect for rising interest rates in the United States and the fact that interest rates are so tremendously low around the world, the 5 years is forever. Tom and I were talking about that before the break, how, making predictions out 5 years is a very difficult thing to do. But with interest rates so low, chances are they will go up over the next 5 years. and the negative correlation between equity prices and interest rates, this makes this CD golden.
Well, and you've seen it with just, recently with Yellen's suggestion that, December is still squarely on the table. We saw the equity markets drop because of nervousness about that. So absolutely, and in the U.S. in particular, we're on one path here in the U.S. with rising interest rates. Now the rest of the world, I'm not so sure about. I mean, Japan and Europe may keep rates lower. Again, that makes their equity markets maybe a little more attractive to investors. So you may see some of that money move out of the U.S. equity markets into Europe and Japan as they continue to try to stimulate.
It also makes gold and silver more attractive, because the longer you keep this cheap money in the markets, that's the bull case for the precious metals in the long run.
It really is, and the safe haven case too, and that it's just we don't know what's going to happen when at the end of these QE process. Nobody can tell you what's going to happen because it's never been tried. History. So it's a real question there.
Yeah, this is really, what's so cool is that it's going to be so, well, it is so unique, but in the context of where we're going with it, it absolutely is. In fact, the guy from, Royal Bank of Scotland, I think, came out today, and it was so cool because he was just talking about common sense. He says, listen, I've been in this business long enough that I know that someone is always on the wrong side of the ship when rates go down too much too quick or go up too much, right? And what he was talking about is that he was talking about his bank itself, that they want to get as defensive as they can. And I read this article, and that's unusual for a bank, Chris. You know what I mean? I said, oh,
sure. And again, this is a hedge. We're not. Everyone probably is still going to have equity exposure in the U.S. You should in a well-diversified portfolio, but this CD is a way to hedge that exposure in a way, and so that if in fact the equities drop, this CD is going to pay off.
And folks, the phone number to call is 855-750-4051. That's 855-750-4051. You can also just go to everbank.com/TFNN. All the details are right there. Chris, you have a great night, a safe night, and of course, we look forward to having you on again.
I appreciate it. Thanks. And again, that cutoff is Thursday, so you got to act quickly.
Act right now, folks. everbank.com/TFNN. Awesome, brother. Thanks, Chris. Have a great one. Have a safe one.